Hey guys, Lee here. Normally I do specific individual lessons for you about trading the markets, but we're going to do a mini course this week, okay? All about how to get started and learn to trade the markets, to build your edge and to live the life that you want to. So we're going to go through a few lessons this week. We're going to talk about the fuel, the reason why you want to trade the markets. Why do you want to get started to learn this new skill? What's the benefits and what's the negative side of it as well? And then we're going to dive into, on this lesson, in fact, we're going to dive into choosing the right account, whether you're going to be doing a funded account. You probably don't know what a funded account if you're a complete beginner, and we're going to dive into that. Or should you put your own money into a trading account, a brokerage account, because you have to risk some money to make some money at some point. Okay, so we're going to go into lesson 1 and 2 here, and then throughout the week you're going to get lesson number 3, reading the markets. What's the main things that matter? Remember, I am a member of the Society of Technical Analysis. I'm a fully qualified technical analyst. And we'll talk about charts, and we'll talk about what makes up a chart and what really does matter on a chart. And then number 4, finding your edge in the market, whether you're day trading or a swing trader. We'll dive into that. We'll dive into the strategies as well that we use here at Trading College. And then number 5, towards the end of the week, automation versus manual, or even hybrid trading at the moment, which is absolutely fantastic. So a little bit of human interaction and then a bit of automation with the machine can do the work for you, and I'll show you exactly how to do that and set that up as well in lesson number 5. All right, so let's dive into lesson 1 and 2, and let's talk about the reasons and what sort of account you should be using. Lesson number 1 here, why do you want to trade the markets in the first place? Let me tell you now, trading is hard. Okay, trading is hard. No matter what you see online, no matter what is all over social media, trading is hard. Okay, it is hard for several reasons. Money is involved in this. Okay, you're putting money into a trading account, or you're investing some sort of money, and with the money comes emotion. All right, now you're going to have to work on yourself. You're going to have to educate yourself, most definitely. The number 1 reason I trade the markets is freedom. Okay, the freedom it gives me. I don't have to get up at 7 o'clock in the morning and get on a train and go into the city and work for somebody. I don't have to drive up the motorway. I don't have to go anywhere. Okay, just get into my office here. I start trading the markets. But it's taken me a long time to learn how to be a decent trader, about how to be a consistently profitable trader. It's taken a lot of pain, it's taken a lot of money, it's taken a lot of dedication. Now we can accelerate that for you here at Trading College and mentor you to do that. Of course, there was nothing like this 21 years ago here in London, so it was all self-learning, self-mistake, self-taught them days. Okay, but it's the freedom, guys. Taking the kids to school, going to see their school play, going to see their leavers assembly that I went to this week. This is what it gives me, that freedom. I don't want a helicopter. I'm not interested in that. I just want to be able to do what I want when I want, and I can say that to you, with complete honesty. That is all I want. The money is nice. It is nice to have the money because it gives me choices. All right, but the choice is I choose freedom. All right, so that's what I want to do. That's why I trade the markets, and once you know how to do it properly, it is so powerful. It is so good. Well, what happens, okay, is that a lot of people don't get out the light. What that means is they're always in darkness with trading. And why do I say that? And the reason I say that is because 70% plus of traders, according to the brokers' websites, lose money with that broker. So 70 or plus, nearly 80%, I reckon, lose money with that broker. And all the brokers, go and have a look, do your own research. All the brokers will say there's a certain percentage of traders that lose money. The higher the percentage with a broker that the clients that are losing money with that broker, the worse probably the broker is. Okay, so stay clear of that. Any broker that says on their website over 80% losing traders are losing money, that is pretty high. All right, so avoid those. So for me, it's all about freedom, but it's a brand new skill that a lot of you want to learn. Okay, and so with that skill, you're going to need your education, you're going to need your dedication, you're going to need some money to invest, you're going to need time to do this, and you are going to hopefully enjoy the learning process, because once you learn how to do it properly and you get out of the dark side of not ever being consistent and get into the light, it is so powerful, and it's a wonderful life. It's a wonderful career. It is a wonderful I was going to say job then, but it's not a job. Okay, it is purely just a skill that I've learned, and many of our students have learned here at Trading College, that you can go on and achieve whatever goal you want to. Okay, so that's just an overview of why I trade the markets. It's family orientated, and absolutely anyone could do it. If you're all over the world, doesn't matter where you are, you can trade the financial markets. All right, let's dive into number 2 now. Let's dive into broker. Let's talk about funded accounts and what other accounts there are out there. All right, so part 2 here, lesson 2, funded accounts or self-capital. A funded account is a broker that gives you capital to trade with, okay? And you've got to pay a fee, which is a one-off fee, or if you foul the requirements and the rules and you breach the rules of that account, then you will probably want to pay again, okay? So there's tons of funded accounts out there, or I say funded brokers out there. There were more originally. Over the last 3 or 4 years, we see a big influx of funded account brokers. And you can pay them a small fee and they'll give you a 10,000, 5,000, whatever you choose, assessment account. An assessment account is you've got to prove that you can make 10%, and then once you've done that, you've passed the account, and then they'll give you the $10,000 to trade with, and then away you go. That is an option. That is a potential for you to then go and take some real money out of that account if you start making some really nice profit. But there's a couple of things that you need to be aware of. The funded account brokers have rules. You've got to have they have rules, and so you've got to be able to follow those rules on their website. There's no a certain drawdown that you need to abide by overall, and a daily drawdown. You need to make sure you understand that, and you need to understand that once you've broken the rules and breached the accounts and you've drawn down, or you've lost, let's say, 10% of your account, then that's it. Your account is closed down and you've lost your subscription, or you've lost the payment, which may be $50 or $200 or whatever it is that you paid to have that assessment account. And sometimes there are 1 steps to do and 2 steps to do of the assessment account. So 2-step accounts obviously are going to be cheaper. 1-step account, you've got to do 1 step, you've got to get to 10%, and then you can get yourself an account. Now, these accounts are not necessarily live accounts of real money, and I would say majority of them are not real money, because I would say, and I'm not, I don't know the insides of the workings of a funded broker account, but I would say the money they do pay out to people that are have made money that month is going to come from the subscriptions or the payments that others have made to buy the assessment accounts. Okay, so they're taking money here and they're paying people out. The ones that do make money, they're paying them out. All right, and there's probably not many of those people making money. They're going on, they're paying $50, and then they've just got a 10 grand account. They probably blow it and make mistakes. They'll do well for a few days and then blow it the next couple of days. All right, so there is some real good benefits of this, and I think you're not risking. Let's say you had $5,000 in your account, or pounds. Should you put that 5,000 into a self-funded account like a normal broker? You'd take the whole amount from your bank account and put it into a just a normal brokerage account. So you've got 5,000 now to trade with, or should you leave 4,800 in your bank account and then put a couple of $100 into a funded account, see whether you could do it? And I think for me that is a good option. If you're somebody that likes following rules, then funded accounts will be for you. They probably might fit you very well. If you're someone that really doesn't like the set of rules that the funded accounts demand, then this is not going to be for you. It's not flexible. the rules are rules. You got to abide by the rules and the drawdown criteria. And once you do get profitable, you're going to have to pay them pay yourself 80% and then 20%, all there and thereabouts. Okay, so 80% will come to you, and 20% will stay with the broker. Now they do direct live accounts, so it's a lot of money, maybe in the thousands of dollars. You can pay £1,000 or dollars to get X amount of dollars, and you've got a live account. The rules are still stringent. The rules are still there. You do have to follow the rules. Don't break the rules, guys. Otherwise, you are going to breach that trading account. All right. So I think it's a good option. Funded accounts. A lot of bad ones have disappeared now. And we've got a partner here at Trading College called Stealth Trader. Let's dive into it and show you what the accounts are. So here's Stealth funded broker account here, and you've got the 2-step and 1-step challenges, crypto markets as well. And I think they're great. I think funded accounts are really good for people that don't want to risk a lot of money. And you've also got instant funding now as well, which is obviously going to cost you more money. But at $42 for a 5K account, you're risking $42.50 here to potentially get a 5K account. Instead of putting 5K into your invested trading account, then why not risk $42? And I think this is what the positives are around funded accounts. Now, if you go to a normal broker account, now this is IG Index. I've been with IG Index since the day I started trading, and you'd have to fund the account with your money here, and then you can trade anything. You've got Forex markets to trade. You've got shares, the Teslas and UK shares in here. You've even got weekend markets, cryptos if you want to dive into those guys.
While everyone's been debating whether cryptocurrency would ever catch on, it's already here, changing how we think about money. Digital currencies that once seemed like science fiction are now being used for everything, from buying coffee to purchasing real estate.
We've certainly will show you how to
you can use crypto to make purchases, send money to others,
or
hold
trade
it
anything
as an
here.
investment.
You can trade
Bitcoin, launched in 2009, was the very first cryptocurrency. But today there are thousands of different
especially if you're resident in the UK,
including well-known names like Ethereum, Solana, and
if you make
Cardano,
some money,
each with their own unique features and purposes. When you own cryptocurrency, what you actually have is a private key, which is essentially a sophisticated password that gives you control over specific address on the blockchain.
Make sure you go
Your
with
cryptocurrency isn't physically stored anywhere. Rather, the blockchain records that your key has access to a certain amount of the digital currency.
Tips of when to buy and sell, because that goes
Bitcoin was created by a person or group using the name Satoshi Nakamoto.
They have an A book and
Back
a B
then,
book.
it was mainly of interest to technology enthusiasts and had almost no monetary value. By 2013, Bitcoin reached $1,000 for the very first time, catching wider attention. The 2017 booms,
which is pretty good. In fact, yes, it's 69% of retail investor accounts lose money when trading spread bets and CFDs with this broker. That's pretty good, guys. That is quite low compared to 85%. All right, but you can open an account, spread betting account. You should have a spread betting account, I think, if you're based in the UK, because you can take advantage of the profits while being tax-free. All right, so that's the broker for now. On tomorrow's lesson, we'll dive into the charts and dive into that. If you want to jump into a little bit more quickly, then we've got the Apprentice Trader course, which is sort of a bit like this course that I'm doing for you now, but that's free as well. Just dive into that on our website or on YouTube in the description, and yeah, enjoy it, guys. We'll dive into the charts on the next lesson. Take care.